Let's talk a little strategy now with legendary investor Jim Rogers, CEO of Rogers Holdings, joins us from the phone somewhere in the countryside of Germany. Jim, thanks for coming on the program. We ran a soundbite from you earlier about you comparing this situation to Japan and some former financial stressors in the global economy. Obviously, you want to see the markets take care of themselves, but now that we know we're going to get something from the U.S. government, what would you like to see in it? What does this need to have to satisfy you?
Well, history shows that these plans don't work. It didn't work in America in the 70s, and it didn't work in Japan in the 90s. History also shows that what does work is to let the market clean it out. I mean, Russia had a horrible collapse in 1998, but in the last 7 or 8 years, they've been one of the fastest growing economies in the world. South Korea had a horrible collapse at the end of the 90s. Nobody bailed them out, and they've been one of the most rapidly growing economies in the world for the past 7 or 8 years. History shows. I mean, it's not what I want. It's what history shows. You let things collapse, you clean out the system, and you start over, and you have a very sound and long-lasting high growth rate. Otherwise, you drag it out for a decade, and you have problems.
Jim, so what you're saying is that there's nothing wrong with the model of capitalism. It's just the way that it's being approached right now, that these problems are being approached.
Well, absolutely. I mean, they won't let the market do its work. Capitalism is where the market does its work, and then you clean when you have excesses, they get cleaned out, and you start over again. These guys, for the last 8-10 years, have refused to let the market do its work, refused to let it clean out. Greenspan did it, and now Bernanke's doing it. And I find it astonishing that any of us, especially you all, would sit there and listen to Bernacke and Paulson. They've been dead wrong every month for 2 years now. They've been going on the TV and swearing under oath that everything was okay. Under oath, they've been swearing every month for 2 years that things are fine. Why would anybody listen to them?
Jim, let's talk about how the markets are functioning elsewhere. The commodities having a very, very poor third quarter. How did your funds do, and what did you make of the market story?
Well, first of all, I don't have any funds. I just licensed my index. But, of course, commodities were down in the third quarter. But, Guy, I mean, the commodities have been up over 300% in the last 10 years. You pick on one quarter, commodities have done 1,200% better than stocks in the last decade. Yeah, they had a bad quarter last year.
Are they turning, Jim? This is the story. You're talking about an economy that needs to have some fairly radical surgery. The demand story is going to come down quite rapidly. This could be a slightly longer-term story for commodities on the downside than simply one quarter.
Well, okay, so it's 2 quarters, so suppose it's a year. I mean, the bull market in oil, for instance, started in 1999. Oil has gone down over 40 or 50% 3 times in the last 9 years. It wasn't the end of the bull market. But that's the way markets work, Guy. You should watch CNBC. Markets are always having big corrections and consolidating. There's nothing unusual about it.
Jim, I know you're very bullish on China, and you always say get in there when there's a correction. Is this the kind of correction you're talking about, and how do you think China will be impacted by the credit crisis that we're seeing elsewhere?
Well, Lisa, I started buying Chinese shares again a couple of weeks ago. I keep hoping that there'll be a collapse. I mean, I don't like the fact that I'm actually making money on those stocks. I'd like for the thing to go ahead and collapse so we could have a selling climax and start over. But China is starting to loosen up. China is starting to reverse some of the money tightening that they've been doing for 2 or 3 years. So I'm starting to go back in. I wish they would not tighten up. I mean, I wish they would not loosen up. I think it would be better if they continued the tightening for a while. But who am I? I'm not Chinese. I don't vote in China.
Well, Jim, we wish we had more time, and I think we, would love to continue the discussion at a later date, especially as it relates to Treasury and the central bank here in the U.S. But we do appreciate the time out of your busy day to join us. Jim Rogers, CEO of Rogers Holdings.